What's up guys, it's your Money Cat. In this video, we'll talk about Tesla. Tesla just reported its earnings last week, and because of that, or perhaps not really because of that, but for other things, stock has been falling pretty hard along with the broad market. So we'll take a brief look at what happened with the earnings report, and we'll take a look at the chart for technical analysis and try to predict where Tesla can go from here on out. Looking at the numbers, Tesla beat estimates for revenue. It came in at $10.7 billion, which is up 46% year over year. The estimate was slightly below that at $10.4 billion. However, the big negative this quarter was the earnings per share, the EPS. It came at 80 cents, which was much lower than the consensus estimate at $1.03. And perhaps partly because of this miss, the Tesla stock has been going down ever since the earnings report. For me, this miss doesn't really mean much, maybe because I have just too long of a perspective, but I realize that expectation for Tesla is just sky high, and that means some quarters, it might miss earnings here or there. What's more important for me is the company's direction, company's vision, and if those things change, then I start to get worried. But as long as those are intact and those are going in the right path, a miss here or there doesn't really concern me too much. I'm more excited about Tesla projecting annualized 50% growth in deliveries per year. That to me is a great sign because usually companies don't like to project a really lofty goal, meaning they meaning Elon Musk and Tesla people, they think this is pretty realistic for them to achieve. Another reason why I'm not too concerned about earnings miss here or there is because Tesla is still a growth story. Just because they were added to S&P 500 does not actually change anything. They're still a growing company that's trying to take up as much market share in the EV industry. And I like their approach where they're trying to produce cheaper cars for the masses and not worried about maximizing the profit margin. What this allows them to do is it allows them to be the first electrical vehicle company to be at the door of the consumers. And this is really important, especially for first-time electrical vehicle users, because this now Tesla is imprinted in their brain as basically the EV, the first EV that they tried. And as long as Tesla is a quality product and consumers are happy with it, then this gets imprinted in their brain as, oh, Tesla is now almost synonymous with electrical vehicles. So in their mind, EV, Tesla. Just like if you think of a phone, you think of phone, Apple. This is similar to Amazon's strategy where they weren't too concerned about profit margins for things like Amazon Prime. All they were concerned about is trying to get people to buy into Amazon and get them inside that Amazon ecosystem. Now, Tesla obviously doesn't have an ecosystem like Amazon, but at least within the EV sector, I like this type of approach, especially for a long-term investment. Now let's look at Tesla on 180 days for our time frame chart. Since back in November, Tesla has been riding this bullish trend line and just climbing up and up. However, most recently last week, the price did break to the downside of this trend line, and when it did bounce, it actually got rejected by the same trend line and now is sitting at $787. So now this trend line is no longer valid, so I will remove that right here. So now our job is to try to predict where Tesla might rebound. There are some people who are excited about this downslide and looking at it as a potential sale. I agree with the idea, but for me, the price is still not cheap enough for me to add to my Tesla shares. Because if you think 787 is cheap and is a good price to enter, then you should have been buying all along this upward movement. So my first target buying point would be at around 700. Now, I'm not saying the price will drop to 700. It may not. And if it doesn't, I'm okay with it. I'm okay with not adding more to my Tesla shares. But at that point, Tesla would be about 22.5% from all-time high. At that price, I think it's more justified as a sale rather than the current price, which is only about 10-11% off the all-time high. As far as finding a strong support is kind of difficult for Tesla because Tesla has been doing nothing but going up. So for this 700 line, I can see that it worked as a resistance a little bit back here, but quite frankly, that's about it. I can also see potential support around 600, 605. For this support, it's because of this resistance here, and it seems like the price stabilized around this 600, 605 level, ultimately turning it into a support and continuing to head on upward. And it was validated once more a little bit after as well. At 600, it would be 32% off all-time high. I really doubt that we'll reach this point unless we have another broad market sell-off just like back in March 2020. But I'm just planning it out just in case price does drop all the way here. I'll be buying in a tiered system where if it does reach 700 or so, I'll be entering a position for part of my available cash. And also another time if it does reach this secondary support level that I drew in. So this would be number 1 and this would be number 2. I can confidently buy at these points because Tesla's story, Tesla's direction have not changed at all despite this past quarter's earnings miss. Looking at it from a slightly broader perspective, this is 1-year daily chart for Tesla. The MACD and RSI is still relatively high despite the current 10% sell-off. What I want to point your attention to is this yellow line right here, the 50-day moving average. That is coming just slightly below the 700 support level that I drew in. So if we do have an accelerated downfall going into next week, it can definitely fall to the level where this support level will catch up to that trend, or not trend line, sorry. This 50-day moving average will catch up to the support level, this horizontal support level, and provide another layer of support where Tesla could possibly bounce from that level. Previously, I also mentioned that I most likely won't be adding to Tesla shares until the RSI and the MACD falls back down to more appropriate buying levels. So that level would be around 40 for RSI on a 1-year daily time frame chart. So we still have a little bit of room to go. All this room right here. We're currently at 51.81. And on MACD, we have a little bit longer to go. But if we can somehow get close to 0, then I think that would be a great buying opportunity, as the last time the MACD was at 0, that's when this explosive movement began. Also with the RSI, if you look at the points that it touched the 40 level, that was back here. That's when this movement began. And also here, that's when the price bounced off of the September sell-off. And then around here, that's close to where, again, this explosive upward movement began. If the craziness continues in the market, which it definitely could, this market right now is just so unpredictable, then I think the sell-off could continue, not just for Tesla, but for many other stocks. And it could be a great buying opportunity, especially for long-term, to add to your position size in your long-term portfolio.